Hello, fellow investors. Still with restaurant stocks. This time I'm screening two pizza stocks: DPZ, Domino's Pizza, and PZZA, Papa John's. Which of the two is the better buy? I'm sorry, guys, I haven't been around lately. Hopefully, I get to finish screening the whole of restaurant stock this week. Now, if you ask me, pizza is life. I mean, I don't see pizza ever going away. I haven't really given it time to compare which of the pizza makers sell the most delicious pizza, but you can go check for yourself. It could be Domino's, it could be Pizza Hut, it could be Papa John's. It's really a matter of preference. But again, if you're buying stocks based of preference, then you might get across paying overpaying for your favorite pizza stock. So always keep in mind that the stock is different from the company. There has to be some fine line between them. You can love the company all you want, but the valuation for these companies should be far more important beyond anything else, especially when you're in the stock market looking to make money. You have to buy these companies at the right prices. Anyway, I've screened DPZ when it was trading at $393.2. Told you it's overvalued, don't buy. And if you didn't buy because I convinced you not to buy just yet, I saved you $50.19 per share now that it's trading at 343.01. DPZ is now 40% off the highs. Here is DPZ's valuation summary. EPS multiple of 2, trading at 2.75 times their margins, 1.04 times PE to price to free cash flow. Now, if you ask me, their valuation right now is looking quite reasonable at these prices. I'm not buying DPZ for the second metric. Instead, I'll use the third metric, price to free cash flow 1.04. But again, I only buy when the price to free cash flow is at 20 and below. It's currently at 25.22. Although this looks attractive now, at least compared to the one before. I still think DPZ is still overvalued, although I think this is a good price to be in just for a trade. Not necessarily a value play to hold long term, it's still trading with high multiples, as you can see here very clearly, 2.75 times their margins. Still treated like a growth stock with high growth expectations. I still think there's more downside to this stock. That's why if you're ever buying this, it should be just for a trade. I'm a buyer of DPZ at $130, fair value of $125, and intrinsic value of $6. This is from Guru Focus. I'd sell this if I were you, but never short though. Just put this on your avoid list. I also don't recommend buying, at these prices. Next is Papa John's, PZZA. Actually, PZZA, this trailing 12 months, they have a negative EPS, negative 0.54, due to 1 week quarter. Although the other 3 quarters, profitable, I used that and its EPS was 1.76. And there I just divided the price by the EPS and I get the PE, just to get a clearer view of things. Obviously, it's overvalued based on the trailing 12 months EPS, but if you look at the past EPS, even if you use 2.83 here, it's still overvalued. Their margins are much lower than that of DPZ. Actually, half of DPZ's margins. Price to free cash flow is over 20, so I'm not a buyer of this stock, even for a trade. Everything here actually looks pretty bad for Papa John's. Here is their valuation summary. I could be a buyer of PZZA below $9. Fair value of $5 and intrinsic value of $15. This is from Guru Focus. This is the summary of the two, so you get to decide which fits your investment style. The question now is, which is the better buy? Although both stocks have negative equities, I mean PB ratio is 0 for these stocks, meaning investors get nothing out of their investments when the company gets liquidated. Um, they're both overvalued. Both stocks have relatively high debt levels, terrible dividend yields, 1% only. I think the better buy here is DPZ. I'm not comfortable buying at these prices. I don't suggest buying at these prices, but I guess the question is, do you really want to own pizza stock that badly? I mean, it's overvalued. You'll be paying for future growth potential that is likely or unlikely to happen years from now. It's basically gambling. Ultimately, I suggest just stay out of the stocks, avoid them, put them in your avoid list. But if you love the chase, the risk, the possible higher than market results, I'd buy DPZ.